Welcome to the House of Ravenscroft, the podcast where real estate and financial planning align to help you build lasting wealth and make smarter moves, combining market expertise, financial strategy, and real-world lessons to help you make confident, wealth-building decisions. So, let's dive into it. Hello, everyone. Welcome back to the show. Today, I'm going to be diving into your Phoenix real estate market update. Now, before I get into the Phoenix numbers specifically, let me just say this. The shift that I've been talking about, the shift that maybe you've been hearing about, it's not just happening here in Phoenix, in Arizona. This is something we're seeing all across the country. And actually, in the last few weeks, I've been talking to many of my trusted partners, agents, brokers, and regardless, this pattern is the same. Buyers are gaining control, inventory is building, and sellers have to get more strategic than ever. In even pockets where it was a strong seller's market, we are seeing a little bit of softening. Those homes are taking a little bit longer to, in fact, sell. So, gonna shift back here to the Valley of the Sun, the Phoenix Metro, and the market is continuing to shift. I want to be super clear. I've mentioned this in the past few episodes. I've mentioned it in some of my publications and commentary. This is not 2008. We are not in a crash. We're not in an environment that would even lead us to a crash. Again, it's a correction. Many of the sellers right now, they don't have to sell. And that's a big key, is they are trying to see what they can get. They maybe want to upgrade. They want to downsize. They don't have to sell. So that's the big difference between where we're at now and what obviously we saw in 2008. Yes, there still are some desperate sellers, but for the most part, a lot of people don't need to sell. And that's really important to remember and to digest. Prices, though, are slowly slipping. And like I said, buyer leverage is growing. And, sellers they need to adjust their expectations. So let's get into the numbers, the city by city breakdown, and everything you need to know what's going on here in the greater Phoenix Metro. So market index. The market index has dropped to 71. And I oftentimes get some questions from listeners, from clients, from people who read my email publications of what the heck is the market index? The easiest way to understand and really to describe the market index is a market index of 100 means we have an equal weight of supply and demand. It's equally weighted. That would be considered a balanced market. Anything above 100 on the market index scale means that supply and demand, when we weigh the two, demand outweighs supply, causing a seller's market. When we flip it the other side, where we're at now, a market index of 71, that means that supply outpaces demand. There is a lot more supply than demand, which leads us to be in the buyer's market that we're currently in right now. So 71 is a pretty low number. It's not historically bad or terrible, but it is well into buyer territory. The balance of supply and demand is off, and it's kind of looking at it from a stance of prices are quietly deflating. It's not collapsing. It's kind of a slow trajectory down. Sellers, they're losing grounds in most negotiations, and I'll talk about that in a little bit here. But again, home prices, they're trending down overall. I'm going to read some numbers here, and you'll see that the numbers aren't huge, but it's something to take note of. Active listing prices are down 2.4%. And then the median sales price went down from $451,000, and now we're below it, to $449,500. And then the price per square foot on closed listings dropped 1.7%. So you see not huge numbers, But when we add all these months of these slow drops, it does add up to a much bigger number. Now, I talk about this all the time, and I really just want to reinforce what is happening in the greater Phoenix metro with regards to builders, right? Builders are driving a lot of the activity right now because of the aggressive incentives that they offer. Sometimes when I mention the incentives that buyers or that builders offer, sometimes people think there's a catch. Oh, that's an adjustable rate. That's not a 30-year fixed. No, many of the builders are in fact offering 3.99, 4.5%, 30-year fixed conventional. There's FHA, there's VA as well. Some, and actually even in the last few weeks, I have seen some builders offer as low as 3.5%. So there's the rate buy downs that the builder pays. There's appliance packages that are included. There's the backyard that's done, that's fully landscaped, closing cost credits, you name it, they're offering it. So they know what they're doing. They know where the market's at right now. They know buyers have power. They know buyers have leverage. And they know many buyers do not want to take on a rate that's over 6.5%. So builders are showing up. They're doing what they can to get deals done. And for all you buyers out there, consider new construction. Please look at it. Like I talked about previously with kind of the wealth building potential, when you can lock in such a low rate compared to where rates are at now, use that savings to invest and turn that savings into long-term wealth. So just an update of what the builders are doing. We're still seeing those incentives. We're still seeing them be very, very aggressive. So now let's break it down, city by city breakdown. We're seeing it all across the board, right? This softening of the market is happening in every single city, with the exception of one. Paradise Valley was the only city that saw improvement for sellers this last month, and it was actually up 15%. Now, when we peel back the data, I'd say a lot of that has to do with luxury sellers pulling their homes off the market for the slow summer season. But it's still important to note that that is a very strong seller's market right now because of lower supply. Otherwise, though, we saw Buckeye, we saw Phoenix, we saw Fountain Hills. They all took hits. They were dropped anywhere from 6 to 8%. Cave Creek and Avondale were also some notable ones that had dropped. So right now we have 9 cities that are officially in buyer market territory. 7 that are balanced, but right on the cusp of a buyer's market, and only 2 cities in the entire metro that would be considered sellers' markets. So when we look into the overall market conditions, like I said, demand is not there. We have so much more supply than demand, and demand kind of continues to drift backwards. Luckily, supply is mostly flat, but that is creating a lot of pressure on sellers. Like inventory isn't ballooning, which is good, but it's also not shrinking. So we're kind of just at this stagnant, flat area with regards to listings. And then, of course, we have rates. Rates are still hovering around the high 6s or so. So unfortunately, there's really no realistic path to 4% or 5% again anytime soon. I'd say that ship has sailed, and we're not going to see that again, anytime soon. So with buying, right? Let's look at buying. Let's look at the higher rates right now. And I've had this conversation a little bit more in the last few months, and I kind of want to bring it to everyone's attention. We should all be paying attention to the rental market, not only here in Phoenix, but in every single market. Here in the Phoenix metro, rent prices have been flat since 2021. So that's looking back 4 years. And with inflation rising and incomes up, renting has actually become more affordable in real terms. So that's making it very difficult for buyers to jump and become buyers and to purchase in this market. especially with mortgage rates where they are. Now, I say real terms because, of course, your monthly cost is going to be lower. Looking at it, month by month, if we're going a longer term trajectory, long term, which is again what real estate is meant for, buying is always going to trump renting from a financial standpoint. That's not factoring in lifestyle choices and flexibility or just preference. But if we're looking at it from a long term perspective, factoring in the ability to have it as leverage, to sell and net a profit, or of course the fact of tax breaks and tax benefits. But it is important to know maybe renting might make more sense. That lower price per month to build up to that purchase. Now, this is a little bit of a wild reality that we're working with and dealing with right now. Buyers have control, right? Buyers have a lot of leverage, a lot of control. You've heard me say that. I'm going to continue to say it. But buyers are not just asking for repairs anymore. Typically, you have an inspection. Then you have your asks of what you're asking the seller to fix, to repair, or there's a credit or maybe a sales price reduction in lieu of those repairs. What I'm starting to see now is buyers are kind of asking for full remodels. I talk a lot to other agents in the Phoenix Metro, getting feedback on listings or just kind of what they're seeing in with their network, with their clientele. And I've heard some crazy asks, really. I've heard for requests for new roofs, even though the roof is 10 years old, still got some life to it. Same thing with new AC units. They still technically work, but the buyers are asking for new AC units because they don't want to deal with the cost in 5 years, 10 years, or whatever that looks like. I want to repaint the entire home. I want you to reframe the closet. I want you to redo the kitchen. And sometimes buyers ask for this and sellers accept, but these costs are rolled into the sales price. So it makes it easier for buyers to afford them so they're not paying out of pocket for these big ticket items. This is something to note because if you're looking at a home, right, and you think, oh, that home went for the exact price it was listed, sometimes this is what sellers are doing, is they're actually doing those big things, keeping the home sale the same. And, it actually makes sale prices look stronger than they actually are because that home that sold for, say, $500,000 with that dated kitchen and needed paint and all these things could, in fact, have been done by the seller. So just something that's kind of interesting that I wanted to point out. And, this tactic is becoming a little bit more common. It is, of course, skewing the data. Like I said, buyers are negotiating these upgrades into deals. And if the appraisal holds, the sale price appears stronger than one would say the marketed underlying value. So it's creative, if it's working, good for the buyers, but of course, only when the seller is motivated enough to say yes. And like I said, sellers don't have to sell right now. So case by case, it could work for some, others might not work. But again, something very, very interesting that I wanted to point out. Condos and manufactured homes. So this is kind of a statistic that I haven't really seen, but single family homes, they're still selling relatively well. But condos, townhomes, manufactured homes, they're seeing the lowest success rates going back 14 years, 2011. When we looked at some data in May as well as June, the listing success rate for condos and townhomes dropped to 58%, meaning only 58% of the time a condo or townhome that is listed on the market is actually selling and closing. Manufactured homes are doing even worse. Those were just under success rate of 57%. So it's the lower end of the market that's facing the most challenges, especially when you factor in the big item, which is rising HOA fees, long-term maintenance costs, maybe insurance issues with those complexes that maybe just don't make sense for a buyer. And I've even seen this analyzing a lot of condos, townhomes versus single family, oftentimes it's cheaper to buy a single family home than it is a condo because of the elevated HOA fees and insurance costs and such. So, if you have a condo, if you have a townhome, manufactured home, something to be aware of. It is not necessarily a quick sale. It's also potentially not a successful sale as well. Something else to consider. Arizona, and specifically Phoenix, real estate is becoming a lot more attractive to international buyers because of currency shifts. The dollar is weakening. So look at a few different examples because these numbers are pretty interesting. If a buyer was using British pounds, they're getting a 10% discount compared to earlier this year. Canadians are seeing about a 4% discount, of course, due to exchange rates. So international activity is still limited. It makes up a very, very small portion. Canada is really the only significant foreign source of buyers here from a percentage standpoint. But it's a small factor that it could grow if the dollar continues to weaken. It's definitely not going to be something that we're going to see a huge improvement from demand. It's definitely going to be solely locally or U.S. based that's going to fuel that. But an interesting statistic to kind of note. The other interesting statistic is foreclosures. So we are starting to see foreclosures numbers inch up pretty much every single month. It's not dramatic, right? But it's just enough to note and now to kind of pay attention to. In the last, this was May numbers. There were 389 new notice of trustee sales and then 73 trustee deeds recorded in Maricopa County. So we're looking at the entire Phoenix metro. That's the highest number that I've seen on a monthly basis since before the pandemic. And close to, looking at the chart here, that's nearly double of what we saw this time last year. So I don't personally think it's a wave. I don't think it's a sign that sellers can no longer offload their homes fast enough to, of course, avoid the auction block, because sometimes that you can still have a good amount of time before that period. I think it's mostly due to the flood of listings, right? It's the amount of listings we have and the competition, just making it harder to get the top dollar quickly. And if you're in a position where you've bought the home within the last 2-3 years, you might not have that much equity, since we haven't really seen that much appreciation. Or if it's a new construction home, right? If you bought a new construction home in the last few years and you're in an area that has a ton of new construction, it's kind of saturated, you might actually have some negative equity because of all the competition from builders. So let's look at the buyer side and the seller side. So let's first focus on buyers. You have the advantage, right? 100% buyers, you have the advantage. We haven't seen this type of leverage for buyers really since 2009. You have more inventory to choose from. You have the ability to negotiate harder, and buyers are winning much more often than we've seen. The other thing to note is wages are rising too here. Phoenix reported let me look at the number here. It is a 9.3% increase year over year in wages. But inflation locally is at 0.3%. So you oftentimes hear on headlines, the news, inflation. You also hear wages haven't increased. That's not necessarily the case here in Phoenix. 9.3% year over year with wages, but inflation is just 0.3%. So that's huge, right? That's improving affordability, even factoring rates, right? If rates don't drop, if rates kind of stay where they're at, that's helping buyers a lot. And when we look at prices under 500,000, which is actually about 58% of sales, they've already dipped about 2.2% from last year. So again, helping with the affordability issue. If mortgage rates drop even more, hopefully, right? That's what everyone's waiting for. We could see a serious uptick in some contract activity and homes under contract. Now for sellers, this is the way I'm going to say. Just please don't panic, right? I understand it's a concern if the home has been sitting on the market, you're not able to sell the home. Things have been bouncing back, right? We're seeing a little bit of an uptick in demand from buyers, and starting to see a little bit of a spike in mortgage applications really in the last month or so. But I will say there's a lot more sellers that are pausing, right? So there's going to be some more, you're going to see a lot more homes go off the market as we get into the summer kind of slow season. In the last 2 months, these are some interesting numbers that I want to throw out there. In the last 2 months, new listings are down 39%. Cancellations are up 38%. And expired listings have surged 84%. So, like I said, sellers don't need to sell. A lot of sellers are opting to rent out their homes instead of selling in a tough market. Why sell when you don't have to, right? I know several of my clients, they're looking at that where if we're getting through August, September, and we still haven't closed, we're going to pivot. We're going to turn it into a rental. We're going to look at some other options, because why sell when we don't have to, and why take a big loss, again, if we don't have to? So this is key. Sellers who are strategic and I'd say coachable by their agents, not unrealistic, not stubborn. You're still getting results. You're still getting activity. You're still getting showings. You're still getting offers. It's really the homes that, price right, they show well, and they check all the boxes for buyers. The rest, not so much. It just takes that one buyer to see that home and think this is the perfect home for me, where maybe 10, 12 other buyers thought wasn't the right location, wasn't the right floor plan. We didn't like this. So it's a process. Sellers just, I'd say, stay patient. But here's the bottom line. Market's correcting. It is not collapsing. We do have prices that are softening. Inventory has kind of remained steady, but it is elevated. And of course, no buyers. You have more leverage than you've had in over a decade. Yes, we do have some foreclosures appearing. Something to note, something to monitor. Condos, lower priced homes, they are facing a little bit more challenges. And, sellers got to just work a little bit harder with your agent to compete. And especially if you're in an area where there's new construction, unfortunately, their offers are very aggressive and it is hard to beat. Buyers, I'd say, especially with those that are experiencing that income growth, and if you have patience, it's a great window of opportunity. If you're selling, strategy matters more than ever. Buying, this could be your best chance to negotiate a deal that truly works in your favor. Thank you for joining me on this episode of the House of Ravenscroft. If you found today's episode helpful, I'd love it if you'd follow the show and share it with someone working toward their own financial or real estate goals. For more insights and resources, you can always connect with me through my website or various social channels. Until next time, here's to building wealth, one decision at a time.